It has been 1 year since the historic NAR settlement. And 1 year ago, we were all curious what would happen to buyer agent commissions. And the data says that after 1 year, buyer agent commissions have gone up. According to a recent Redfin report, buyer agent commissions in Q2 of 2024 were 2.38%, and the average commission in Q2 of 2025 was 2.43%. So, yes, a lot has changed with the process regarding buyer agent commissions in the last year, but I wouldn't say that things got any worse. We have a lot more clarity and transparency within the relationship between agents and buyers now, and I think everyone would say that's a positive. So, from the agent's standpoint, in the last year, what would you say has gotten better and what has gotten a little harder? Tell us what you think. You might need to do something about your current levels of revolving debt. And you can do what many smart borrowers are doing, and that is tap into your equity. Cash out refinance volume saw its highest levels in Q2 of 2025 in over 3 years back in 2022. Tappable equity has hit $18 trillion nationwide, the highest levels ever, and equity increased year over year for homeowners over $600 billion. Yes, a cash out refinance may increase your mortgage interest rate. Cash out refinance applicants in Q2 took a 1.4% higher interest rate than their existing mortgage rate. Now, that may seem high to you, but check your current credit card interest rates and get back to me and let me know if that still seems like a high percentage. Leveling home values and home sales might cool the percentage of equity gains. So, if you are someone that's looking at your options to tap your equity, you might want to do so now. The worst place that you can go to refinance is probably not where you think, and that is your current mortgage servicer. So, my opinion comes from many calls that I get from borrowers frustrated with their experience. And here's how the story usually goes: the current servicer sends an aggressive marketing piece to the current borrower. That usually comes with an insane, over the top offer of an interest rate lower than current market value. And the borrower, well, they take the bait. And why wouldn't they? Everyone wants to save money, right? And here's where the adventure really begins. You see, in my opinion, the servicer never had the ability to really offer that low of a rate. Maybe they were hopeful that during the loan process, market would improve, they would be able to offer something comparable or something attractive enough to entice the borrower. And they're banking on that borrower going through the process and eventually getting to a point where they feel like they've done enough work. Maybe they would settle for something less than what was originally advertised. This is known as a classic bait and switch. And maybe even worse than these shady sales tactics are the processing timelines that they're putting borrowers through. You see, I got a call this week from a borrower of mine who was told after 3 months of engaging with his servicer that he needed to provide receipts from a gardener on a house that he sold 3 years ago. Make that make sense. So, what does make sense? Well, save yourself all the hassle and all the drama. Call yourself a trusted loan advisor and get real advice on your current situation and what the market really entails today.